Many times, users need to produce reports from their GL. For example, they have journal entries for debits and credits that flow into different balance sheet and income and expense items. The following demo works from a table of journal entries to produce a balance sheet and income statement. The table is set up with a beginning balance of dollars in our accounts. And then we have journal entries for different transactions that occur during the month that hit these different accounts. On the Rumfox pivot model side, we've actually set up dimensions to support our reporting needs. So as you can see, we have our balance sheet and income statement, the balance sheet being made up of our total assets, liabilities, and equity. And then on the margin side for our income statement, we have our income and expense. And these particular accounts are being fed from the journal entries from the table that we were just showing you in Excel. So let's take a look at the dimensions, the debit, credit, net value, and account type, whether it's an asset or not. Then we have the time dimension, showing maybe the first couple of months to just show how this works. And then the data type, whether it's monthly or year-to-date values. Let's jump over to the rules to get a better understanding of how this is being calculated. And you can see the debit and credit here are making calls out to our table to sum up all the debits and credits by account, by time, to pull that information into our pivot model. And if we jump over to our data table itself, you can see the journal entries and the accounts that they're hitting, and then the debits and credits that are being produced to total up into our report. So let's go back. We can see our year-to-date value being created. We can now see the accounts that we define as assets, and you can see the filter list here where that gets defined. And therefore, when we set that up, when we apply this if logic here, we can make sure that we get the proper net value associated with the particular account. So let's save these rules and now minimize the rule panel and go over to the views and open up one of the views that we've set up, the consolidation report, and run that so we can see our results. And we only really have data for January and February, but as you can see here, we now have our balance sheet and our income statement. The balance sheet is actually a check between the two to make sure that we balance. And as you can see here, total assets, total liabilities, and equity. And then you can see our margin value coming from our income statement into our retained earnings. And now that we have this data in our pivot model, we can slice and dice it any which way we want to see both monthly and year-to-date values, as well as being able to see, the debits and credits and how they float into the net value. Here's the account type being defined as assets, and there's your income statement and balance sheet.